Public.com presents The Rundown, your daily market update in under 10 minutes. My name is Zaid Admani, and today is Monday, August 25th. In today's episode, we'll tell you more about Jerome Powell's speech on Friday and why the Fed is moving on from inflation. We'll also discuss the U.S. government taking a 10% stake in Intel and why that investment might backfire. Then stick around to the end of the show to find out about Southwest Airlines' latest policy change. We got a great show for you today. Let's go. The markets are coming off a winning week thanks to the Powell pump on Friday. Stocks and crypto ripped higher on Friday after Jerome Powell hinted at a September rate cut during his Jackson Hole speech. The S&P 500 closed up 1.5% on Friday. The Nasdaq climbed 1.9%, and even the Dow had itself a day up 1.9% and closing at record highs for the first time this year. But nobody cares about the Dow. So it looks like rate cuts are coming, but the Fed and Jerome Powell are in a tough spot right now. Remember, the Fed's job is to keep inflation low and employment high, and they use interest rates as a tool to keep that balance. But right now, inflation is still higher than the Fed's 2% target, but the labor market is starting to cool. But based on Jerome Powell's speech on Friday, it seems like the Fed is now more focused on strengthening the labor market over inflation. The next Fed meeting is on September 17th, so a lot can happen between now and then, so we'll have to see. Right now, the markets are pricing in an 85% chance of a rate cut next month. Now, looking ahead to this week, it's all about NVIDIA. The largest company in the world reports earnings on Wednesday after the bell, and once again, it's the most important report of the earnings season. Lately there's been some nervous chatter that the AI trade might be overhyped or even a bubble, but if NVIDIA drops another monster quarter, those bubble talks could quiet down, at least until next earnings season. But if NVIDIA ends up missing on these earnings, it could get ugly. So we got another pivotal week coming up. We're going to be staying on top of it, so make sure you guys are subscribed to the podcast to stay in the loop. Let's run through some headlines, starting with Intel. On Friday afternoon, Commerce Secretary Howard Lutnick announced that the U.S. government has taken a 10% stake in Intel, making the American taxpayer the company's largest shareholder. The U.S. government is buying 433 million non-voting shares at $20.47 apiece for a total investment worth $8.9 billion. Now, this isn't new money, by the way. About $5.7 billion of the money used for this investment is coming from the CHIPS Act grant that was already promised to Intel but not paid out yet. The other $3.2 billion is coming from a secure chips program. So basically, Intel is getting the cash from the CHIPS Act, but instead of getting it for free, the government now owns a piece of the company and could see possible returns on that investment. Now, Intel confirmed that the government is getting non-voting shares and they're not getting a seat at the board. So they can't actually tell Intel what to do. But let's be real. If the US government owns 10% of the company and the president of the United States calls to talk about it, you're probably going to take his call. And that's what makes this whole situation so unique. President Trump continues to have a hands-on approach to the economy. And for Intel, this cash infusion should help as they try to turn the company around. The company has been lagging behind competitors like TSMC and Samsung, and saving Intel has become a matter of national security now. The US government doesn't want 90% of advanced AI chips being manufactured in Taiwan. They want more chip manufacturing to come to the US. And Intel is a big part of that plan. So this deal by the US government to invest in the company has been good for Intel stock. But this investment could end up backfiring. We actually talked about the pros and cons of this investment and how Intel lost their lead in chip manufacturing on our latest deep dive episode. We posted that episode on Saturday, so go check that out if you missed it. Now, sticking with corporate deals, let's talk about Keurig Dr Pepper, because they just announced an $18 billion deal to buy the European coffee giant JDE Peet's. And this is just the first step in another deal to break the company apart and undo the 2018 merger between Keurig and Dr Pepper. I think the board realized that combining a coffee company and a soda company, not the best move. So once this acquisition of Peet's closes, the company plans to split into two separate businesses, a $16 billion global coffee giant and an $11 billion beverage company focused on Dr Pepper, 7-Up, and energy drinks. And that way, investors get to decide which business they actually want to own. This acquisition of Peet's should help Keurig's struggling coffee business. Keurig's US sales have been flat since 2021, and they're expected to stay flat through 2026. Now, Keurig has raised the prices for K-Cups, but that's getting offset by people just buying lower pods. Count me in as someone who stopped buying pods because of the price increases. JDE Peet's, on the other hand, they're doing great. The coffee and tea company based out of Amsterdam has been expanding into Europe, Latin America, and the Middle East, and they're actually growing sales, which were up 20% in the first half of the year, largely due to price increases. And that brings us to the bigger conversation about the price of coffee getting more and more expensive. Droughts in Brazil and Vietnam, two of the world's largest coffee exporters, have caused prices to shoot up. At the end of July, the price of 1 pound of ground roast coffee was $8.41, which is up 33% from a year ago. And we might not have any relief anytime soon because Trump's new tariffs on Brazilian coffee beans, which doubled import taxes to 50%, might make coffee into a luxury item soon. I switched from being a coffee guy to an energy drink guy about a year ago, and I haven't looked back, and I think I might have made the right decision. Let's talk about some stocks making moves today. Opendoor stock is ripping higher again. Shares jumped 39% on Friday after Jerome Powell hinted at rate cuts during his Jackson Hole speech. And the stock is up another 5% this morning. See, Opendoor's entire business model depends on people buying and selling homes. So lower rates would mean cheaper mortgages and likely result in more activity in the housing market, which has been frozen these days due to higher rates. So the chance of lower rates added more fuel to the meme rally that has boosted the stock from just 50 cents at the start of July to now over $5. And there are some investors that think the stock has more room to run. One of the biggest bulls on Opendoor is hedge fund manager Eric Jackson. He's the founder of EMJ Capital. He's the one who got the Opendoor hype started back in July after he tweeted that Opendoor has a potential to be a 100-bagger with a price target of $80. I actually had a chance to interview Eric Jackson last week, and we talked about why he's so bullish on Opendoor and where he sees the future of the company going. In fact, he called Opendoor the possible Google of housing, which I thought was pretty interesting and kind of confusing. I asked him about that and a lot more in the interview. The interview went live yesterday. In fact, it was our first interview on the podcast. So please go check that out and let me know what you think. I'm trying to get better as an interviewer, so your feedback would be very helpful. Now, getting back to the stock market movers, let's talk about some losers this morning. Furniture stocks are getting sawed down this morning after President Trump floated new tariffs on imported furniture, which sent shares of Wayfair, Restoration Hardware, and Williams-Sonoma in the red this morning. A huge chunk of the world's furniture comes from Vietnam and China, and these companies import heavily from Asia. Trump posted on Truth Social that new tariffs will bring the furniture business back to North Carolina, South Carolina, Michigan, and the states, all across the union. Now, some of these companies have already started doing that. RH, for example, has moved manufacturing to North Carolina, and Williams-Sonoma owns factories in North Carolina and Mississippi. But, opening more factories takes time. And in the meantime, tariffs might mean higher costs for consumers and squeezed margins for these companies. As a result, shares of Wayfair are down more than 6% on this news, RH is down more than 7%, and Williams-Sonoma is down more than 3%. Let's wrap the show with a fun fact. Starting in January of 2026, Southwest Airlines will require plus-size passengers who encroach on the neighboring seat to buy an extra ticket. And this extra ticket will be non-refundable unless there are open seats on the plane for passengers to sit in. This is just the latest move in Southwest's complete personality makeover. They went from being like the super chill, cool friend you knew in college to being a total suit. They've ended open seating policy, which to me actually is a good thing, but they're also charging for bags now, and they're even tweaking their routes. They're essentially trying to be like every other airline because their current business model hasn't been working. Southwest's revenues dropped by 1.5% in the last quarter. So they're making all these changes to maximize revenue growth opportunities and hope that their stock rebounds. Southwest's stock over the last year has been the worst performing of the big four airlines in the US. Now, personally, I've never been a big fan of Southwest, especially since their airfare wasn't the cheapest, and I can't imagine all these changes helping them get more customers. Don't be surprised the next time you go on a Southwest flight that they start charging you for snacks. Well, all right, guys, that's the rundown for today. Hope you guys enjoyed today's episode. If you did, and you have like 6 extra seconds, consider giving us a 5-star rating on Apple, Spotify, wherever you listen to your podcasts. And if you guys haven't yet, please go check out our weekend deep dive episode about Intel and my interview with Eric Jackson on why he's so bullish on Opendoor. Like we mentioned last week, the Rundown is now expanding to 7 days a week. I'm super excited for the interview series. We're going to be talking to a lot of cool people. So keep an eye on your podcast feed for that and let us know who you think we should interview for a future episode. Thank you guys so much for listening and watching. Shout out to Mike and Connor for all the work behind the scenes. And we'll see you guys back here tomorrow.